Welcome everybody. Really great to have you all join us, and it's a pleasure to have an awesome guest with me tonight. This is Real Invest Webcast episode 12, and my name is Joseph Olatiwegun. I'm a realtor and a real estate investor in the Southern Ontario area, Niagara area, but I deal in Niagara, Hamilton area, GTA, all the way to London, Guelph, anywhere in between. And my goal for all this is to share the knowledge of real estate investments, to learn from people who've been there, done that, and to encourage each and every one of us to take bold steps to grow our portfolios, our investments, or to take the leap, to buy your first property, the second, the 10th, whatever it is, to just keep pushing the limits, because it's possible as long as you can set your mind to it. And today I have a guest that I'm really excited to have here with us, because just chatting with her before the show, I've already gleaned quite a bit. So I'm confident that y'all are in for a treat. So without much delay, I'm just going to pass the floor on to her, and we'll get the conversation started. Nikki, you're welcome to the show, and we're glad to have you here. Could you just introduce yourself to the house?
Thank you for inviting me. I'm so honored to be here with you and with your listeners as well. Adeni Care for the Nigerians, so I go by Nikki. It's much easier. I don't have to pronounce my name several times for people to get it. Moved to Canada with my family about 10 years ago now, and went to school here like most people, did my bachelor's and master's in nutrition, and now I work as a nutritionist with the feds, and started in the real estate for about 2019, about 3 years ago now, and I have enjoyed it since then. I think that's like a major recap of myself. I'm a mom. I have a 6 weeks old baby boy and a 2.5-year-old princess. Oh God, it's Halloween night and she's dressed as a princess for Halloween. That's a handful. And my husband and I, we do the business together, and is my rock and my support.
Yeah, I'd like to hear that. That's great. And what motivated you to get started with real estate investing?
So in 2019, we purchased our first property, my husband and I, and we bought a 5-bedroom house. And then after moving in, we quickly realized that we don't need all this room, and we thought about what to do. So we started house hacking. So from house hacking through Airbnb, we were doing short-term rentals. So we put up all the other rooms that we're not using on Airbnb. And since then, we realized, whoa, you can really make money in real estate. Just by living in our own house, we don't have to pay for anything. We were making over $3,000 a month with the 3 rooms that we put on Airbnb at the time. And we were living in the house, and our mortgage was not even up to half of that. So the house hacking was basically paying for the bills, was paying our mortgage, our utilities, was feeding us basically, and then we didn't have to touch our income at all. So my husband and I started chatting about how we could get another place and put it on Airbnb. So we were looking at the market at the time, and we thought, oh, let's do another one and buy a townhouse. Except we didn't buy a townhouse, because then we're like, oh, we can do more. So we started researching, and that's how we came into the actual investing side of real estate rather than a consumer, so like our own house. But yeah, that was the push.
That's interesting.
To
the other. Right. And so right now you've come along from just owning your primary residence to just acquiring more. But what kind of investment strategies do you employ right now?
So now we focus mainly on the BRRRR strategy, so the buy, renovate, rent, refinance, and repeat, as well as the short-term rental or the medium-term rental using the Airbnb platform. Those are the two main strategies that we focus on. We've done flip, but not in our local market, so we find that a bit challenging with a long distance flip, at least for us. I know people do it, so everyone has their own cup of tea, basically.
Yeah, I was gonna ask about the flips. If you're doing flips a long distance, how did that work out? How did you manage it?
So that was our first challenge, actually. The very first real estate investing deal that we were involved in. This was after researching how to become an investor, how to become a landlord. I've attended boot camps for free too, so people can always do that. There are boot camps on Facebook that you can attend for free. You get a lot of resources, a lot of information, a lot of ideas and knowledge. Haven't done that. We found someone that had a deal at the time, and this was after we had refinanced our own property, our very first real estate. So we had the money, and we're like, okay, we need to get started. We didn't want to buy a townhouse, so let's do a flip. This person came up to us, he had a flip. We just had to put down the down payment and the renovation, and he's going to take care of everything. The renovation he came on as a contractor, basically. Except it wasn't. And it didn't happen. So we closed on this deal. He was just there. Like, he wasn't doing much. And that was one of the things that pushed us too, because we're like, okay, that's a lot of money. It got to make us money, or at least get us our money back. So that was one of the push for us too, to become investors ourselves. And when I say investor, I mean like active investors rather than just the passive partners. So it was difficult because it was far from us. We didn't want to be driving back and forth. It was supposed to be a flip, so there was no potential to really rent out this place. Plus, we didn't have the knowledge at the time too. And yeah, we just put it back on the market. We're like, okay, this guy is not doing what he's supposed to be doing. We don't have nobody in that market. We don't know anyone there. We just found a realtor and sold it. And that was that for that flip. But yeah, it was challenging.
I can imagine. Yeah. I'm always weary of long distance, but now. Sorry, go ahead.
Well, it was that person because most of our investments right now are long distance, except they're not flips. They're rental. They're long-term rentals. So the long term, the long distance, we now learn to build up a team in whatever market we want to invest in. We didn't know that at that time. We were just like doing stuff on the fly, especially with that flip. But with a long term for us, or a long term rental, it was much easier to find a contractor because we have now calculated in our numbers the holding costs. So we had time to find contractors, to get recommendations. Having also joined mentorship communities as well. It was easier to get recommendations and referrals. So we do long distance investing is possible with the right team, basically, is what I'm trying to get at.
Right. And I would imagine that it's much easier doing long distance buy and holds than flips.
In my experience, I don't know about other people. In my experience, it was easier for us, yes. And it is easier for us.
Right. Again, because I guess from my perspective, I'm just thinking like flips could require a lot of hands-on, right? Compared to buy and hold, where it's mostly just passive management, right? So that's yeah. All right. So You've been investing now for a few years, and how has your life changed? What has been the main reward for you as an investor, being a real estate investor?
You mean other than the money?
Man, how good is the
Uh, we're live, so let's keep it cool. Um, well, one, we've been able to just get knowledge of things that, as an immigrant, it doesn't just come to us easily.
money?
Like, I guess if 10 years ago when I moved to Canada and somebody met us at the airport and say, guys, just go buy real estate, just do real estate. That's all you need. Just invest in real estate. Maybe we wouldn't have appreciated it as much as we do now. And one of the benefit is being able to share the knowledge that we're getting with our community, with our circle. Yes, it does change in the sense that it changes our income in the sense that it increases it. There's that flexibility. It doesn't mean we're now going to start buying what we wouldn't buy on a normal day. It's just being able to leverage that additional income for more qualification for mortgages, basically, So yes, there's that. And being able to also help my family to acquire more real estate, my siblings, our friends. So those are really great rewards that we appreciate a lot.
Yeah, that's interesting. And what stood out to me is towards the ending of that statement that eventually the benefits is beyond you. It's about what you're able to do for friends, for families. A lot of times people, again, they say knowledge is power, right? So you don't know what you don't know, and there are a lot of people with potentials to do something, but just because they're around you who knows you know your way around the block, you're able to share the love and bring other people into what you're doing. So that's awesome, because there's nothing as rewarding as just seeing other people do well, right?
That's right.
Yeah. And what you starting out, what would be your the major challenge that you encountered when you were starting?
The first was trusting in ourselves that we could even do this, because there's that, for lack of better word, I'm going to use stigma, that Black people can do certain things, immigrants cannot. Oh, I don't want troubles, like I'm not going to even touch that, or I don't even want to get involved in debt, so I don't want this or that. So trusting in ourselves that we could even do this was one of the challenges. And the moment we started to educate ourselves more and get more knowledge of what we were getting involved in, then we started to believe in ourselves more. We started to trust that, look, people are doing it. Why can't we do it? It's all legit. It's all like legal documents every step of the way, There's that. And then finding people that you can trust to be a part of your team as well was another challenge. And we were able to really overcome that from being a part of inner circles of mentorship programs where, it's people that, those are your first sort of people that you can trust to give you right information or referrals, and then just being able to talk to your coach, to just know that you're not alone. That really helped us overcome the finding the right team and building our team part of things. And since then, it's been cool.
That's good to hear. Just a few things to note there. First of all, again, for those who joined us halfway the show, this is Real Invest Webcast, episode 12, and on this webcast, what we try to do is to impart some knowledge of real estate investing, let you see what's possible, and encourage you to do the same, for quite frankly, because ideally, there's no reward in everyone just kind of being in their own cocoon and not really realizing what's possible. It's when we spread our wings that we figure out that we could achieve a lot more together than when you're isolated. Sometimes one of the things that Nikki mentioned is the fact that she came into this with a very strong sense of limiting belief about what's possible, and that's something that I know that I've struggled with a lot, I mean, in a lot of areas in my life, and I have to really get past some things to be able to accomplish whatever I want to accomplish. It's important for you to be in the midst of other people doing what you want to do, for you to see that number one, it's possible, and then to learn how to do it. So that's the number one thing: getting rid of your limiting beliefs, overcoming yourself, because the only thing stopping you, or the major thing that will stop you, is you. And the second thing there is to hang out with people who are doing what you want to do. If you are running and you are tethered to someone running in an opposite direction, then you get nowhere, right? It's a zero-sum game. So you don't want to do that. Find a group of people doing what exactly you want to do. Join them, learn from them, contribute towards what they're doing so that they can contribute towards yours. The way mentoring works is not that you come to the table with nothing, but you come with some value, you come with your eagerness to learn, and you make it happen. So that's really, really, really important. Sometimes, maybe what you get away from this show today is it's just a motivation, and then the learning begins, because obviously you're not going to become a guru by watching a 45 minutes webcast, but you could see that it is very possible. Nikki is an example of someone doing it, and if she can, you can, right?
Definitely. If I can, oh my God, like, for sure you can.
Right. Absolutely. So and I was going to ask how you overcame the challenges, but you already kind of talked about that. So right now, I would call you an astute and an experienced investor. What are the kind of challenges you deal with right now?
Well, everyone is sort of familiar with the market now. So the increasing interest rate right now is definitely a challenge, but not a showstopper for sure. So with the interest rate now, it's a bit challenging to find quickly an investment property, but it is possible. And we do have a saying that, if you run the numbers and the numbers don't work, don't force it. Basically, that's it. And that's what we're sticking with. So that's with the interest rate. Other than that, there isn't, I wouldn't call, on the short-term rental side though, we're getting to the cold season, as you know, so there's the challenge of, the reduced bookings for the short-term rentals, but then you've had the peak of time, and this is when whatever you made at that time sort of like helps you out with the cold season, and then the market booms again with the short term. So yeah, that's it really. We continue, because one thing that could majorly be a challenge is not being able to buy properties, or not being able to find investors or stuff like that. But because we continue to associate ourselves with like-minded investors, continue to put ourselves out there, we continue to collaborate. We have several business partners. So those collaborations is not making us stuck. And I know that's a challenge for the Black community, really. Well, in my experience, is the comfortability of being a collaborator. We find it a bit difficult to trust ourselves, knowing that, yes, this person has this thing going on, but I can do it myself, so I don't need to do it with her or with him or whatever, right? But we have overcome that by just changing our mindset and continuing to sharpen ourselves. So yeah, all good.
Right. So it's obvious that you wouldn't have done as much as you have if you have not, taken a leap to trust other people and collaborate, right?
That's right. That's right. Because one of the things we do is joint venture partnerships.
Mm-hmm.
So all the properties that we have bought, not all of them are 100% owned by us. Some of them are joint ventured businesses as well. So it's not. It's a matter of who who is bringing what to the table.
Right.
So, and that has really helped us grow our business really a lot.
That is awesome. And that's I think that's a big lesson for everybody. If you have trust issues, that's a limiting issue because sorry, I often resort to some Bible verses. There's one that says one chases 1,000 and two chases 10,000.
That's right.
On that note, Nikki, can you share with us what you've been able to do in the past few years now? Like in the group that you belong to, in that community, what kind of business have you guys been able to do? And you privately, what have you owned?
So I am part of a mentorship program where we have a yearly goal of the real estate that we want to purchase. And in the first 6 months of this year, collectively, we have purchased over 100 million real estate investments. But privately, for myself and my business partners, we have bought in the first year actually of just starting investing, we bought over 11 properties, and that was like over $20. But now, so far this year, we're over $50 now, and we still continue to analyze deals and purchase properties as we see fit, as long as it meets our criteria. So yeah, we wouldn't have been, there's no way I could have qualified for over 20 properties by myself and my husband. That's not possible. So JV rocks, yay. Basically JV, joint venture, sorry.
Absolutely. Yeah, so first year 11 property, you call that slow, but that's in many people's books. That's a lot. And now over $50. Wow. How many years is that? 2019 to days, right?
2021 actually was when we started buying investment properties.
Wow. So in less than 2 years, $50.
That's right.
That's awesome. That's awesome. Again, this is why I do this, people. See what's possible. In 2 years, $50. You can do it. Okay. And you need to also realize that in as much as you can do it, you probably cannot do it alone. Let's get that out of the way. You can do it, but you can't do it alone. You need others. You need a community of people around you that will push you the ropes. So we're in a weird market right now. What's your current take on the trends of the market, particularly with the interest rates? What do you think the price is going to be doing in the short term and the long term? What's your take?
Well, in my opinion and in my experience, the little experience that I have, real estate has always gone up and down historically, right?
Right.
And history tends to repeat itself. So now that the market is stabilizing, we're going to have another time that the markets are going to jump up again. Now it's buyer's market, there's going to be seller's market, and then there's going to be buyer's market, and then there's it's always like that. So with the market now, if you're not buying, then I don't know when you would be buying. Basically, because people are always talking about, I want the market to crash and then I'll buy. But then I guess at the back of their mind, they're thinking, oh, I want a 500,000 property to now be 100,000. Okay.
Yeah.
Fine. I don't know. Maybe that will happen. I don't know.
Yeah, it's interesting to see how people react because at the peak of the boom, let's say, even January this year, you see people saying we want the market to drop and then we'll buy. Now you're telling them, okay, let's do it. And they're like, oh, we want to wait a little. I'm like, what exactly are you waiting for? You're waiting for the market to rise again or what? Like, I don't get it.
Yeah.
Yeah, now really is the time to jump in the market, at least from my perspective as a realtor. Yeah, it doesn't get better than this. Now it's the time to hop in, but I just don't understand the psychology of people sitting on the sidelines, even when the market is as low as it is right now.
Yeah, but even when the market was hot, it was still a great time to buy. So I'll give you a scenario. Okay, one of the properties that we bought last year, August-ish, we did a bit of a renovation, cosmetic, really like less than 20,000. And then refinanced within 3 months, pulled out all of the investor funds and a lot more. So first of all, in that market, the market was hot, right? You put in your money, but then you got a lot more back. Your money plus more. And now you have this property with none of your money in it, free. Was it a bad time to buy with the market being hot?
Not really.
And now that property is what, whatever, but it doesn't matter because it's servicing itself. And I don't have no money in it. My investor don't have no money in it. So even if the value drops back to whatever we bought it for, it still doesn't matter because the rents didn't change. And the expenses are still what the expenses are. And
Right.
it's not like we plan to sell. So that's the thing with investment that people don't understand, or even like buying your primary residence too. In my opinion, okay, you don't like nobody needs to take this literally, like, oh, whatever, I don't, you know.
Yeah.
But like when you buy your house that you want to live in, for example, you're not going to be keeping track of market trend like, oh, my house is now worth 300, but I bought it for 320. Who cares? You're living in your house now. And it's not like you want to sell it tomorrow. It's your assets now. It is yours. Investment too. Like you bought a rental property for 300 and now, oh, the market is stabilizing. I bought it too soon. I should have waited. It's now worth 280. So what? But then nobody's going to complain when it's worth 400, right?
Right.
So it's an investment. You buy stocks, the value goes down, the value comes back up, whatever. I'm not an expert in stocks. I'm just saying, So it's what poison you want to give yourself. Choose your poison.
Right.
But the worst is, oh, I'm waiting for the market to slow down. I'm waiting for the market to crash. And then you have, say, 100,000 in your account. And you're waiting and waiting and waiting. You kept out your 100,000 in your savings account, giving you 0.1% per year or whatever. By the time that market crashed, safe, your 100,000 will probably be worth 60,000. Fact. But yes, you are still seeing 100,000 in your account, but that 100,000 will probably be able to buy something worth 60,000.
Right.
So it's better that your money is tied in an asset rather than in your whatever TFSA, yes, that the bank is selling now. Anyways.
Absolutely. Again,
yeah.
Another Bible verse talks about the sluggard saying that there's a lion in the streets, and that's why he won't go out. See, we can make 1,001 excuses to why we're not gonna make a move when we need to, but you have to just realize that you're the one kind of standing in your own way. If you just kind of waiting for things to be perfect before you make a move. As you were talking there, Nikki, I remember the client of mine that bought a property somewhere around the Hamilton area for about 300. Now the property is worth about 800. And then right around the peak of the market, and about 6 months ago, he bought one for about 400. That's now worth 300. It's easy to look at that and begin to lament that, wow, the property I bought for 400 is now worth 200. But at the end of the day, the market has its ups and downs, you've made 400,000 on one property.
Yeah.
That's if you're selling both now, which you're not doing anyways. But if you're selling
Mm-hmm.
both now, you made 4 on one and you lost 100 on the other.
Mm-hmm.
You made 400 on one, lost 100 on the other. But you're not selling anyways. You're keeping both. In a couple of
Exactly.
years, both will continue to be in profit. You're renting it out.
That's
So
right.
what's the fuss, right?
That's right.
Then
That's right.
at the end of the day, it's in a very the smaller properties is in a very much developing area. It's developing at a very fast pace. That I think in about a year and a half, that property will be worth about 600 easy. But we'll have to see what time reveals to us. So again,
Yeah.
as long as like Nikki said, if you run your numbers properly, also you tend to factor in like maybe talk a little bit about that. What are your thought processes just on a high level, what you look at before you jump into a deal?
So we have an analysis sheet that we use before buying any property, and if the numbers just doesn't work, we don't buy it. That's it. We're not emotionally attached to any deal or any property, any rental properties. So in the past, like even currently with the high interest rates at variable now is at what, 5%.
Mm-hmm.
At 5%, we're running our numbers at like 7.5% interest. And if the property meets that criteria, yeah, we'll do it. But when when the interest rate was around like 2%, 1.5, 1.2, we've had 1.2. That was a good time. We were running numbers at 5. So because we know that 1.2 was just not, it was not realistic. We were living in a, dreams at the 1.2 rate. That was not real. But everyone wants, the rates to remain at 1.2. But the terrible thing too is the government kept talking about, stabilizing the market and helping home buyers buy their first home, and then increasing interest rate. And now I think fixed is at 5.85 or 6% now. A first-time home buyer most people are not going to be able to qualify for their first house with that kind of rate. But investors will, because we work based on numbers. Home buyers work based on emotions. So they're still not helping them. But how can they help? I don't know.
And that's why anyone with an investor's mindset, this is really the time. This is the time. Houses that would normally sell at the peak of the market, sell in 10 days, are now on the market for 6 months, right? Multiple price drops happening. So again, if now it's not the
shopping time. It's shopping time for investors.
Exactly.
Mm-hmm.
All right, we are getting close to the time to wrap up for tonight. Promise my audience that we'll try and keep things short and sweet, but it's been a very good conversation so far, so don't really feel like ending abruptly, but just some wrap-up thoughts. One of the major challenges that I hear over and over again when you talk about potential new investors is that they don't have enough money to get started. What's your advice to them?
You don't need a lot of money to get started in investing. As a consumer, yes, it's your house, then you need to really show that you can afford your house.
Right.
But as an investor, you're not living in it. If the numbers work, you just need to be working or amongst the right set of people, basically. A lot of the properties that we've bought, we have $0 in them. But, everyone brings different things to the table.
Right.
So you don't need a lot of money to start. You just need leverage. What do you have to leverage? Basically, it could be a mortgage qualification ability. And for someone that has the money, that don't have the time, it could just be the time that you're willing to leverage it while someone else is leveraging the money. So working with the right set of people, which is what we've done with our joint venture partners, is, some have the mortgage qualification ability, some have the money, and we have the knowledge and the deal. We make things happen. So you don't need a lot of money. You just need that mindset to be able to start, really. So you need to educate yourself. and know what you have that you can leverage.
Educate yourself, know what you have that you can leverage, and then find a community, plug in,
That's
and
right.
run with it. You said more details, please. Sorry, I don't know what we were talking about when you typed that comment. So if there's a particular thing you want us to discuss some more, please throw it in the comments again. Yes, uh, anything is possible. Anyone can do it, but you have to have the goal mindset. You have to be willing to put the work in, acquire some knowledge, learn from the people who are doing it right now, and not you heard her. You don't necessarily need a whole lot of money to get started. Um, the last thing we'll talk about, unless we have other questions to review, is the role of a mentor. I think you've talked a little bit about it, but just lean into that area a little bit more. What role did a mentor play in getting you to where you are right now?
In For us, the first thing was the confidence, just knowing that, oh, we're not doing this alone. If I have a question, I can ask my mentor or my community, which I was able to access through the mentor, right? And then there's the accountability too, saying that you want to do something and having someone to really lean in and really be on your neck, like, oh, so you were going to do this 2 weeks ago. How far have you gone with it?
Mm-hmm.
Blah, 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 and network. Yes, you can meet people on Facebook, you can meet people wherever, but being part of a program, in my experience, which I appreciate, is that the network, the smaller circle network, where you know that those people didn't spend thousands of dollars to join this program just to chat or just to play, but they're action takers. They're people that want to make things happen and want to build wealth for their generation as well. So you look up to them, and you expect to bring results. So you don't want to disappoint them as much as you don't want to disappoint yourself too. So yeah.
Awesome. Yeah, and again, you want to roll with people heading in the same direction as you. There's so much power in that. Just being, it's like riding the wave, right? Everybody's heading in the same direction. Everybody's motivated to act. You're in the mix of that. Even if your motivation isn't that strong, being in the midst of people that are just go-getters helps you, get going. So
Mm.
you can't really underestimate the power of the pack, so to speak. So thanks a lot, Nikki, for coming on the show. Okay, I have one question here. It says, when is it the best time to refinance?
Every time is a good time to refinance as long as the number work.
Right.
I always it sounds like like I'm repeating myself, but honestly, if the numbers work, you can do whatever. You can even sell if the market is tanking. Say I bought a property for 100,000, and then it was worth 700,000, but now it's worth 500,000. Can I sell if I want to? Yes, I can, because I bought it for 100. Maybe someone else bought it for 500, and now it's worth 400.
Right.
So you can refinance as long as you have equity on your property. So run the numbers and see that once you refinance, what is your mortgage payment going to be? How much funds are you pulling out of the property at refinance? Is it worth doing the work and doing, paying the fees, the lawyer fees, and all that? If it's worth it, pull the equity out and use it to buy another investment property if you want to, or vacation if you want to, because it's borrowed money.
It's
Borrowed
okay.
money got no tax. So
Right. Right. Yeah. It's again, it's really on a case by case basis. Why would you want to refinance in the first place? I guess that's a good question. What are you looking to do with the money? If it's something that's worth your while, then why not? If the money is there,
yeah,
and you won't pay half of the proceeds in fees, then sure. Uh,
yeah.
and I got beat really hard once with refinance, that the fees were just like, man, I did not realize what I got into with that fixed
Yeah,
until I decided
yeah.
to refinance. So all of
And
those points.
I've had one of those experiences once, and that was with our primary residence.
Mm,
Was doing a fixed rate, and then when the rates were becoming 1.2, 1.3, I'm like, oh, we have 3.2. Let's go make it half. And then to break that mortgage was like 20 grand. I'm like, heck no. Then that's when I quickly realized, okay, variable is the way to go if you plan to like refinance your property often, or just do, if you know there's going to be a lot of flexibility around owning your property, then variable it is. So never had fixed since then.
Right, and that's another gem right there. Hold that tight. Variables the way to go if you know that you need a lot of flexibility. You're gonna be refinancing to buy another property. You don't want to be paying 20 grand, 30 grand in fees, and that's exactly
Mhm.
what I had to do. Unfortunately for me, I didn't realize what the fees was going to be. I already committed myself to another deal,
Oh.
a firm deal, so I needed this money out at all costs. So I had to pay that. It was not funny. After paying that, all that crazy fees, I now had to pay off a lot of debt out of the proceeds. So what was left after the refinance was like, it was barely worth refinancing the property. So, but again, another
Mm.
thing you would learn with time is experience.
Yeah.
Some of these
Yeah.
things you would make your mistakes, but again, hopefully your mistakes will be minimized by working with professionals or working with a community of people that knows what they're doing. So
That's
that's
right.
that's something to keep in mind.
Mm.
Yes, I think that's about it right now. I see the trajectory of Nikki's business, and I see her begin to mentor people. She's already helping quite a lot of people around her, but I see mentorship being a thing that will grow on her soon. So if people wanted to reach out to you to just ask questions or ask for mentorship or anything, how can they reach out to you?
On Instagram, it's at Lanik Real Estate Investing, and then you can always book a call on my page, and then you can get more info of personal contact. And from there, you can also email me, lanik.rei@gmail.com. I'll be happy to answer questions, or just if you need opinion on something, happy to chat.
Awesome. Thanks for offering that. Community, you've heard her. She's happy to answer your questions. One of the key to progress personally for me is to be able to ask questions. And there's not no such a thing as a stupid question. If it's something you don't know, then you don't know it. Ask the questions because the answer might just be what will set you on course for the next level. So yes, sir.
That's right.
Nikki, did you say something?
No. I said that's right.
Okay, awesome. Well, thanks everybody for joining. We'll be wrapping up tonight. It's been an awesome time with Nikki here, and honestly, I think I will have you back again to do some deep dive. I hope that you'll be up for it.
Why not? We can go into deal
Okay, awesome.
analysis
Thanks,
live.
thanks a lot for coming, and thanks everybody for joining us. It's Real Invest Webcast, episode 12. It's a wrap tonight. I think it was a very productive session. Apologies to my regular Facebook and YouTube audience. Restream platform just gave us a little bit of a headache at the beginning of the show, and I decided we'll just live stream on IG today, and I'll have the video uploaded to Facebook and YouTube later. But thanks a lot for joining us over here. Maybe this is the format I'm just going to take going forward because I think it's just a bit more streamlined. But thanks everybody for joining. I hope you learned something, and I hope you decide to take this journey a lot more seriously. Have a blessed week ahead of you, and happy investing. Have a good night.
Bye.
Bye, Nikki.